Get ready because the crypto world is absolutely exploding with news, and we've got the inside track on what you need to know. The pace is relentless, the stakes are higher than ever, and if you're not plugged in, you're missing out on the biggest moves happening right now. We're diving deep into the seismic shifts shaking up the market, uncovering the strategies that could redefine everything. From institutional plays that are turning heads to bold corporate ventures aiming to capture a massive slice of the digital asset pie, this is your unmissable update. Don't blink, because the future is unfolding at lightning speed, and you're about to get the full download. Stick around, you won't want to miss a single second. First up, we're talking about a potential game changer in the market, with Contrarian Institutional Buying signaling a possible massive reversal. Could this be the early indicator we've all been waiting for? We're breaking down the data and what it means for the future. Then, we're shifting gears to look at how the big players are rebalancing their portfolios, with a keen eye on Bitcoin whales and a strategic deep dive into Ethereum's positioning. What are the whales doing, and why is Ethereum suddenly back in the spotlight for these major players? Next, get ready for some audacious moves from Japan. One company is making a massive play, aiming to own a significant chunk of Bitcoin's total supply. We're talking millions, billions, and a strategy that could reshape how corporations view digital assets. And finally, we've got a story that's making waves across the business and political landscape. A major family is expanding their crypto empire with a multi-billion-dollar venture. What does this mean for the industry and beyond? We've got all the details. This is Bitcoin Bulletin, and you're already ahead of the curve. Make sure to smash that like button, subscribe, and ring that notification bell so you never miss an update. A shift in the tide. We're seeing a fascinating development in the market that could signal a major turning point. Contrary to prevailing trends, institutional investors are reportedly making significant, contrarian moves into the Bitcoin market. This isn't just a small adjustment. We're talking about strategic buying that goes against the current sentiment, a classic indicator that the smart money might be anticipating a substantial reversal. This kind of behavior from large-scale players often precedes significant market movements, and the data suggests they might be positioning themselves for a bull run in 2025. The implications of this contrarian institutional buying are immense. It suggests a growing belief among sophisticated investors that Bitcoin is undervalued or poised for a significant upward revaluation. For years, the narrative has often been dominated by retail sentiment or short-term market fluctuations. However, when institutions, with their vast resources and analytical capabilities, decide to move against the grain, it demands attention. They are not typically driven by hype. Their decisions are based on deep research, risk assessment, and long-term strategic planning. The fact that they are accumulating Bitcoin now, even as others might be hesitant, speaks volumes about their outlook. This strategic accumulation could be a harbinger of a broader market recovery and upward trend. If these institutions continue to buy, their actions could create a positive feedback loop, attracting more capital and driving prices higher. The market has been volatile, and many have been waiting for a clear signal that the bottom is in or that a new growth phase is about to begin. This contrarian institutional activity might just be that signal. Analysts are closely watching these flows, trying to decipher the exact timing and magnitude of the potential reversal. It's a complex dance of supply and demand, influenced by macroeconomic factors, regulatory developments, and technological advancements. However, the consistent, albeit quiet, buying from these large entities points towards a bullish conviction that could reshape the 2025 landscape. What does this mean for you? It suggests that the current market conditions, while perhaps appearing uncertain to some, could be an opportune moment for those who understand the long-term potential of Bitcoin. The actions of these institutional players are a strong vote of confidence, indicating that they believe Bitcoin's future value proposition remains incredibly strong, potentially even stronger than previously anticipated. This could be the quiet accumulation phase before a much more public and dramatic price increase. Now, what happens when these same big players start adjusting their broader portfolios, and why is Ethereum suddenly back in the crosshairs? Stick around, because we're diving into the Institutional Rebalancing Act next. The big players' portfolio shuffle. In a fascinating display of strategic asset allocation, major players in the financial world, often referred to as Bitcoin whales, are reportedly engaged in a significant rebalancing of their portfolios. This isn't just about buying or selling. It's a sophisticated recalibration that involves assessing risk, maximizing returns, and positioning for future market dynamics. What's particularly intriguing is the renewed strategic focus on Ethereum, suggesting a growing conviction in its long-term value proposition alongside Bitcoin. This Institutional Rebalancing Act could be a key indicator of where major capital is flowing and what assets are deemed most promising for the coming cycles. The narrative around institutional investment has often centered on Bitcoin as the primary digital asset. However, this latest trend suggests a more nuanced approach. Whales, those entities holding substantial amounts of cryptocurrency, are not just passively holding, they are actively managing their stakes. This involves diversifying their digital holdings, and increasingly, Ethereum is emerging as a critical component of these diversified portfolios. The reasons are multifaceted. Ethereum's ongoing technological advancements, its robust ecosystem of decentralized applications, dApps, its role in the DeFi and NFT space, and its upcoming upgrades all contribute to its appeal. Institutions are looking beyond just store-of-value narratives and are increasingly interested in assets with functional utility and growth potential. This strategic case for Ethereum isn't new, but its resurgence in institutional consideration, particularly in the context of portfolio rebalancing, is noteworthy. It implies that major investors are recognizing Ethereum's potential to capture value not just as a cryptocurrency, but as a foundational layer for a new digital economy. They are likely evaluating its network effects, its developer activity, and its capacity to support a wide range of innovative financial and technological applications. The shift from a singular focus on Bitcoin to a more balanced approach that includes Ethereum highlights a maturation of the institutional crypto investment landscape. It suggests that institutions are becoming more sophisticated in their understanding of the crypto market, appreciating the distinct roles and potential of different digital assets. The implications of this rebalancing are significant for the broader market. Increased institutional interest in Ethereum could lead to greater price stability, enhanced liquidity, and further development of its ecosystem. It also signals a potential bifurcation in institutional strategy, where Bitcoin is viewed as a primary store of value and digital gold, while Ethereum is seen as a growth asset and a platform for innovation. This dual approach could lead to more robust and diversified crypto portfolios among major investors, potentially reducing the volatility associated with single asset concentration. Furthermore, the actions of these whales can have a ripple effect, influencing retail investor sentiment and market trends. As institutions make strategic moves, others often follow. This rebalancing act is not just an internal affair for whales. It's a public signal about the perceived value and future potential of key digital assets within the evolving financial ecosystem. Speaking of bold moves, a Japanese company is making an absolutely massive play for Bitcoin. We're talking about acquiring a staggering percentage of the total supply. You won't believe the scale of this ambition, so stay tuned. Japan's Bitcoin behemoth. In a move that's capturing the attention of the global financial community, a Japanese firm named Metaplanet is embarking on an ambitious strategy to become one of the world's largest corporate holders of Bitcoin. This isn't just a minor investment. Metaplanet has announced plans to raise a staggering $1.2 billion through an international share issuance, with a significant portion earmarked for acquiring more Bitcoin. The company, which already holds a substantial 18,991 BTC, valued at around $2.1 billion, is setting its sights even higher, aiming to accumulate over 210,000 BTC by the year 2027. This target represents more than 1% of Bitcoin's total fixed supply of 21 million coins, positioning Metaplanet as a major player in the digital asset space. The capital raised will be strategically deployed. Approximately $835 million is designated for direct Bitcoin purchases, substantially increasing their holdings. The remaining $440 million will fuel the firm's innovative Bitcoin income business. This initiative involves generating revenue by selling covered call options on their existing Bitcoin portfolio, creating a yield-generating mechanism tied directly to their digital asset holdings. This dual approach, aggressive acquisition and income generation, demonstrates a sophisticated, long-term strategy for leveraging Bitcoin within its corporate structure. Metaplanet's transformation is also noteworthy. Originally a hotel operator, the company has pivoted dramatically to become a Bitcoin-focused treasury firm. This shift has already yielded significant market recognition. Metaplanet has been included in the FTSE Japan Index, a move that upgrades its status from a small-cap to a mid-cap stock. This inclusion is expected to attract passive capital flows from traditional financial markets, offering indirect exposure to Bitcoin for investors tracking major indices. The company's year-to-date stock performance, significantly outperforming Japan's blue-chip benchmarks, underscores the market's positive reception to its new strategic direction. CEO Simon Jurovich has articulated a vision that extends beyond mere accumulation. He plans to utilize the Bitcoin reserves to acquire income-generating ventures, potentially including a digital bank or related financial services. This expansion strategy aims to build a diversified, Bitcoin-centric business model, mitigating risks and creating multiple avenues for growth. By integrating Bitcoin into its core operations and venturing into related financial services, Metaplanet is pioneering a new model for corporate treasury management in the digital asset era. This aggressive strategy is Metaplanet's primary method for hedging against inflation and the persistent weakening of the Japanese yen. By holding a significant portion of its assets in Bitcoin, the company aims to preserve and enhance its corporate value through potential Bitcoin appreciation. This bold move positions Metaplanet not only as Japan's largest BTC treasury company by holdings, surpassing even major US-based firms like Coinbase and Tesla, but also as a significant global contender in the corporate Bitcoin adoption race. But the expansion into crypto isn't limited to corporate treasuries. A prominent family is also making massive waves, launching a multi-billion-dollar crypto venture. We'll break down that explosive news right after this. A presidential family's digital frontier. In a development that's stirring considerable interest across both the political and financial spheres, the Trump family is significantly expanding its involvement in the cryptocurrency space. The latest move involves the establishment of a new digital asset treasury company, a venture that signals a substantial commitment to building a crypto empire. This announcement coincides with Eric Trump's scheduled trip to Japan, a destination increasingly recognized for its forward-thinking approach to digital assets and blockchain technology. The core of this new venture is a partnership between the Trump Media and Technology Group, TMTG, and Crypto.com. This collaboration will see the creation of a treasury company specifically designed to hold CRO, the native token of the Crypto.com ecosystem. This entity, to be named Trump Media Group CRO Strategy, signifies a strategic alignment with a major player in the cryptocurrency exchange and services market. The involvement of Crypto.com suggests a focus on leveraging established infrastructure and a broad user base to support the family's growing digital asset ambitions. While the exact valuation of the venture hasn't been fully disclosed, the scale of operations and the strategic partnerships point towards a multi-billion-dollar undertaking. The family's previous forays into digital assets, including the launch of NFTs and other digital collectibles, have demonstrated an appetite for exploring new revenue streams within the digital economy. This latest initiative, however, appears to be a more foundational play, aiming to build a dedicated treasury function for digital assets. The strategic decision to partner with Crypto.com and focus on CRO tokens suggests a calculated approach. CRO is a key component of the Crypto.com platform, used for various functions including staking, rewards, and transaction fee discounts. By integrating CRO into their treasury strategy, The Trump family may be looking to capitalize on the utility and potential growth of this specific digital asset, while also benefiting from the ecosystem's established infrastructure. This expansion into a digital asset treasury company is more than just a financial investment. It represents a broader embrace of the digital economy and its potential. It signals a belief in the long-term viability and growth of cryptocurrencies as a significant asset class. The venture could serve multiple purposes. It might be a way to diversify assets, to explore new business models, or to engage with a growing demographic of digitally savvy consumers and investors. The timing, with Eric Trump's trip to Japan, is also noteworthy. Japan has been at the forefront of regulatory clarity and institutional adoption of cryptocurrencies. This visit could be an opportunity to explore international partnerships, understand global market trends, or even scout for further investment opportunities within the burgeoning Asian crypto market. The implications of a high-profile family like the Trumps making such a significant move into crypto are far-reaching. It lends further mainstream credibility to the digital asset space and could encourage broader adoption among both individuals and institutions. As the venture unfolds, it will be closely watched for its impact on the market, its strategic decisions, and its overall contribution to the evolving landscape of digital finance. That's a wrap on today's biggest stories, but don't go anywhere. We've got a lightning-fast recap coming your way. And that's a wrap on today's massive crypto news. We saw Contrarian Institutional Buying signaling a potential Bitcoin reversal, Whales strategically rebalancing with a new focus on Ethereum, a Japanese firm aiming for over 1% of Bitcoin's supply, and the Trump family expanding their crypto empire with a huge new venture. Make sure to hit that like button, subscribe to Bitcoin Bulletin for all your essential crypto updates, ring that notification bell so you never miss a beat, and let us know your thoughts in the comments below. Don't forget to follow us on all our social channels for even more insights. Stay informed, stay ahead.